Welcome back everyone to another technical video that could get you one step closer to becoming a professional trader. In this video, I'm going to be talking about levels. A good trader needs to know how to draw good levels for day trading. The reason for that is that strategies, breakouts, bull flags, bear flags, double tops, double bottoms, volume indicators, level 2, time and sells, these are kind of signals for an entry. But these signals for entry could get so messy and could get choppy. They could happen every time, multiple times a day at multiple areas. And as a good trader, you need to know exactly which signal you need to use for an entry and which signal you need to ignore. You cannot enter every single time there is a bull flag, a bear flag, ABCD pattern, volume breakout, or a signal that you could see on the tape on the level 2. That is not the right way to trade. You need to know what signal you need to pay attention to, and for that we use levels. Levels are areas. These are the areas of interest. They are telling you approximately what is the area of value that you need to pay close attention around, and then around this area you need to look for a signal. That signal could be a daily pattern, it could be based on volume, it could be based on the level 2 tape, it doesn't really matter. Then it just comes solely to your strategy and your trading style. One thing that I need you to remember, guys, is that levels, they're not specific prices to the penny. If there is a level, it doesn't mean that you need to buy a stock exactly once it touches it, and it doesn't mean that you need to play a breakout once it breaks it. It's a zone, it's an area of interest. Price could get closer to it, could touch it and bounce, could cross over it and then continue the trend. Your job as a trader is to see how the price reacts to this area. For example, around the level you get multiple confirmation candles, multiple hammers, or increasing volume around the level, or a range that's slightly happening above it with also confirmation candles. That means that the level is holding and maybe you want to play a bounce trade. However, if the stock drops into the level, still holds above it, but the shape of the candles is different, you see a lot of red candles, you see a lot of upper wicks. This tells you that the stock is weak and it's preparing for the breakout. So maybe in this particular area, you want to play the breakout of this level. Also, bigger time frames direction is really important. If a level is in an uptrend, I would most probably expect a break or a bounce after the pullback of that particular level. If the stock is an uptrend but I have a level against me, I'd be looking also for a break of that particular level, or maybe a bounce of that level to expect a pullback, again depending on the previous price action. So let's dive right into it. So there are two things that are really important to me when I draw levels, and the first thing is the recency of levels. I need to look for levels that are close to the current price action. I do not look for levels that are far. What do I use for that? For that I use a daily chart. In this particular case, as a day trader, you do not want to mark some random levels based on the daily chart. You could tell yourself, oh, there is a level around here because the price held around this area. There is a level around here. There is a level around here. And maybe there is a level somewhere up here. Are you wrong? You're definitely not wrong. You're right. These are levels. But how effective are these levels for you as a day trader? Do you think that the price today on Amazon is going to go from 100 all the way to 112 for you to be able to use this level? Or from 100 all the way to 87 for you to be able to use this level? I highly doubt that. Why do I doubt that? Take a look at this. This down here is an indicator called the average true range. And I really recommend you check my previous video on how to use the average true range just to make sense exactly of what I'm talking about right now. The average true range on Apple is around $3. So that is telling me that intraday, the candle makes around $3 move. Sometimes it's more, sometimes it's 5. Like around here as well. Sometimes it's 3. Sometimes it's 3 again. Sometimes it's 6. So it could be more or less, but it is somewhere around the $3 value. So the likelihood that the stock is going to go from 100 to 112 is just really low. It's highly unlikely. That is why I do not look for my levels based on the daily chart. What I do on the other hand is I try to identify the overall trend or the overall direction based on the daily chart, because that would help me determine the bias and how I want to use my levels. For example, you could see that Amazon was on a clear downtrend for some particular time. Later, it made a reverse head and shoulder setup pattern. That is the neckline, shoulder, another shoulder, and we finally break above it. So that means that the downtrend that we had is about to end. And now we are going to the upside. We're making higher highs and higher lows. Here we made kind of a double bottom and we broke another range, which means that we are in an uptrend. Therefore, I'd be looking for levels of support to play a bounce and go for a continuation. The time frame that I'm using to draw these levels is the 60-minute chart. So I would first of all draw a level approximately around the open price, and I would go 2 ATR to the upside. $6 to the upside all the way to 106 and $6 to the downside, because like I told you, sometimes stocks could make move bigger than the ATR, but it's highly unlikely that they're going to do that, right? I just want to know what is the area that I need to pay attention to find levels at, or find levels between. This is basically it. I don't want any levels above it and I don't want any levels below it. You obviously do not even need to draw these. You could just simply have it as a simple math. $6 above 106, $6 below 94. That's the area that I am interested in. Then I switch on to the 60-minute chart. And when I'm looking at the 60-minute chart, the rule that I'm going for is the multiple touch. You want to find levels that held for multiple touches. First thing you're going to do, you're just simply going to draw levels randomly based on where they held. And I could see that, oh yeah, approximately there is an area around here, and approximately there is something down here, and approximately there is something around here. Yeah, that is a low around here. And that's it. These are the recent levels that I have. I could remove the 94, don't really need it anymore. And above there is this area around here. One touch, but that's basically it. Now that I have my levels, I need to correct them approximately to the multiple touches, because this around here was touched once. You want a level to be touched multiple times to confirm its trend. So I'm gonna take it lower, maybe all the way down. Yeah, down here would be good. So now you can see you have 1 touch, 2 touches, 3 touches, 4 touches. That is perfect, right? Let's go and correct the lower level around here. This is kind of better, right? Yeah, approximately somewhere. This is even better. Yeah, this is even better. 1, 2, 3, 4. These are the levels that I'm interested in. And from the low down here, would this be a good one? 1, 2, not ideal. This one. 1, 2, 3, 4. Yeah, this one is kind of better, right? You have it once, twice, 3 times, 4 times approximately, and yeah, around here it's not exactly there, but you could get it closer to the level, and that would be it. This is the area that I'm interested in. Now remember what we discussed. We discussed that Amazon is in an uptrend. So the way I'm gonna use these levels around here, these down levels, is for buy signals. And you could see exactly what happened here on the previous day. The stock dropped down into $99, and the previous level that we had marked actually held. And I want you to pay attention to this. You had a cross. It went slightly below it. And this is why I told you these levels are areas. Sometimes you see it higher, sometimes you see it lower, but you need to adjust these levels to approximately tell you the area of interest, what area you want to pay attention to play a stock for a bounce, for long, for short, or whatever it is. This actually happened today and not yesterday. Let's go back to the 5-minute chart and see what happened there. Look how beautiful this is, guys. So the stock today on Amazon is selling off. And at the low, you're starting to get these lower wicks, which shows you strength. And at the low, you're having a hammer, a 5-minute confirmation candle. What did we have in the 15-minute chart? That's also beautiful. On the 15-minute chart, we closed as a bullish 15-minute candle. So combining the daily chart where the stock is in an uptrend, along with the levels that we found on the 60-minute chart, along with the lower wicks that you see here, you could tell that this is not a bad stock to play to the long side. Let's take a look at the 1-minute chart. Maybe we had some more confirmations on the 1-minute chart. Look at these guys. On the 1-minute chart, you are having increasing volume. And an increasing volume at the low of the day is called exhaustion volume. It means that stock is about to pull back or reverse around here. There is a huge shares rotation at the low of the day, a lot of buying and selling, which means that someone believes that this is the lowest that the price could reach. and it just doesn't get any better than this. This is an example of an A+ setup that has all the indicators to get into the trade. Let's take a look at another example, and there it is, WFC. Based on WFC, you could see that we're also in kind of an uptrend, and honestly this is one of the moments where you could mark approximately an area up here of the daily chart, because let's first of all mark it and I'll tell you why. You could have one touch around here, another touch around here, another touch here, another touch here, another touch here, and another touch here. So this is approximately shows you how you could use the daily chart to find a level without going to the 60-minute chart, because based on recency, I could see that this level around here could help us in our recent trades somewhere around here. And when I see something that strong, I usually come to a conclusion that, okay, on this particular day, I'm not interested in playing the stock. Why is that? Because we're sitting at a previous resistance that started acting as a support that could act as a resistance. And I'm afraid that based on this intraday, on this day, and on this day, we're not going to be having our trend. And you could see, based on the daily chart, based on these upper wicks, that I'm kind of correct around here. The stock is struggling around this area. It trends, but then it sells off. It goes to the upside and it sells off. So in fact, maybe I'll be interested in shorting it soon. Let's go to the 60-minute chart and see if we can play this stock to the short side at any moment. So based on the 60-minute chart, unfortunately, there is nothing formed recently around here. What I usually do if there are no recent levels based on the 60-minute chart, I go and I switch to the 240-minute chart. So first of all, like I told you, you want to check the daily ATR. The daily ATR is around $1.25. So I'm gonna go around $2.50 to the upside above the current price and $2.50 to the downside. And if today's close would be around 46.25, as you could see around here, you could go all the way to 48.70 and cover the bottom all the way to approximately 44. And this is the area where we are looking in for levels. And I could see that, okay, approximately there is a level around here. We need multiple touches, like I told you. That would be touch 1, 2, 3, 4. That is actually a decent one. And another one would be somewhere around here. There it is. And you could see that we had 1, right? Touch around here, 2 touches around here, 3, approximately 4, 5. These are the decent touches around here. Now we'll go slightly higher. Another level of interest. There it is. 1, 2, 3, 4. That is actually a good level. And finally, we could go for this, but honestly, this is not so accurate. You had 1 touch, 2 touches. That's not enough. I would go for this. So basically, like I told you, based on what I see around here, these would be the levels of interest. A buy signal could be somewhere down here, but because of the daily level and the daily area that we are in right now, I'm not much interested in buying. But again, it could be a good buy around here because there is a huge range around here that you could play, that you could make money from. But the level that I'm actually going to be interested in to play a stock to the short side would be somewhere around 47.70. Obviously, I'm not going to short it only because it's reaching 47.70. I also need to see how the price behaves around this area. To write them down in the comments below. Let me know what you think about this video, and if you have any suggestions, any feedback, or anything you want me to talk about in future videos, let me know. Make sure to follow me on Twitter, AymanBBT, and if you have any questions, also feel free to email me, ayman@bearbultraders.com. See you in the next video. Bye guys.